let's talk about Chegg. Chegg fits the same mold. You think about Chegg, right? During the pandemic, these guys, if you don't know who Chegg is, Chegg does basically it's a tutor service, or if you're studying calculus, like or some really difficult science in college or in high school, and you're this whiz kid, which frankly, I'm in Southern California, and kids are so darn smart now. They're taking like college courses sophomore year, junior year. These are super hard mathematics, man. And what they do is they subscribe to the service where Chegg has a lot of good answers to questions and really know-how of how to learn a particular very difficult topic. During the pandemic, when they told kids, hey, you got to go home and get on Zoom. So the support to that student really went down, right? You didn't have, office hours to go talk to somebody and say, hey, I don't get the trigonometry. I don't get the, molecular biology. I don't get the this and that. So their stock just flew off the charts. And then again, the stock market said, we don't believe in Chegg. We're going to sell it off 98%. This company is worth 2 cents on the dollar. 2 cents on the dollar. Nuts. But as we study the company, their revenues have fallen. But when we look at Chegg from a cash flow perspective, you think about 98% being sold off, 2 cents on the dollar. Why are they completely worthless? No, they generate free cash flow. So when we look at cash flow, they continue to drive free cash flow. And their cash flow yield is very good because their market cap is so darn low now. So the trailing 12 months free cash flow is 82 million. Their market cap is 204 million. 82 divided by 204 is roughly about 38% yield on free cash flow compared to that market cap. Now, I continue to say I've been nibbling at Chegg, just buying a few shares, averaging in my investment, because I believe that if these guys start to grow and their growth rate is not super bad, they're losing sales, but not like, oh, they lost 50% of sales. If they start growing, look out. If they make their AI product, which they developed an AI product to help students with learning really tough subjects, look out. These guys are just going to crush it. And they may be an acquisition target because another company could come in and buy them and buy all that cash flow, the know-how of how to, deliver the right lessons and tutoring to students, because these guys know that stuff. And as I hear from other students, now I've got two college age sons. One of them studying a PhD at Penn State. The other one's studying economics here at Long Beach State in California. The Long Beach State attendee, I talked to him about Chegg, and he has a subscription. And he said that for subjects that he takes on, yeah, you can use ChatGPT. Yeah, you can use, Gemini from Google, but they maybe answer some of the easy questions, but the hard questions, you really do need the support behind Chegg. Chegg has people behind the service that really do provide the lessons as they should be taught and give that student the right support to get over and complete that class and learn the subject really well. I also heard just today or yesterday, another community member on the Chegg video, he put in that, hey, he's a graduate in science, and he said that Chegg is very useful. You cannot learn the really difficult subjects on ChatGPT or Gemini or Meta AI. Those will get you the standard answers that get you through just elementary courses. But the hard courses, you're going to need Chegg. So that's it really bodes well for this company. We'll see if they make it. For all I know, I'll be wrong and I'll lose some money. But I believe that I'm going to be sitting on a multi-bagger at some point. It might take a little time, maybe about a year, but we'll see. Remind me of it. If I crash and burn, I commit to showing you my crash and burn scenario, how much money I lost. And the flip side, if it works, we'll see how it worked. So you're kind of agreeing with, my logic that, like Zim's a good example where, yes, the situation isn't as good as it was a couple of years ago, but it doesn't mean that in the case of Chegg, you sell off the company, you sell off 98% of the value of the stock. That is just ridiculous. It's like the company's worth, let's just say the company's worth 20% of what it was worth a couple of years ago. Well, that's like a 5-6 bagger from this stock price. I'll take that gain. There's no shame in making money from a company that's a $2 stock that maybe goes up to 10. I've done that with other stocks, like Big Five was down to $2 and it got up to 40. Thank you very much, stock market. So we'll see where it goes.